Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get into what happened in the markets on this USDA day. Now, not necessarily related to USDA, but canola was up $14.30 on the November today, closing at 708.20. Pretty spectacular performance, I would say. We're going to dive into the charts on that in just a moment. Minneapolis was up 4 cents to 621 and a quarter. Kansas wheat was down 3.5 at 522 and 3/4. Chicago wheat was down 7 3/4 to 526 and a half. Soybeans down 8 1/4 at 1042 and a quarter. Corn up 1.5. That's on the July 438 and a half. Canadian dollar closed up 73.51. We're seeing some weakness in the US dollar. Live cattle up 30.37 to 216.95, and feeder cattle up 17 points to 311 and a quarter. All right, let's get into the markets today. We're going to start with canola, which again was probably the one least affected by the USDA, but lots of fun action in this market today. As you can see here, we definitively made a new high today, again closing at over $708. So the November continues to climb amid some weakness in the rest of the oilseed complex. As we mentioned, soybeans kind of neutral. Soybean oil was taking a hit today. Euronext rapeseed taking a hit today. So canola is operating in its own little world here and is bullish. Of course, we all know about the tight fundamentals. But there may be some futures market flow and stuff like that happening as well as we move towards the end of the July contract, or as we move towards the delivery period of the July contract. Did want to show the 5-minute chart today just to kind of show how that strength played out. So as you can see here, early in the morning, we saw strength as we moved even after the open up to about 9 o'clock. These are central time frames here. It peaked again right at 11 o'clock. So we did see some weakness as a result of the USDA report in the moments after, in the first 15, 20 minutes after the USDA report, but then rallied back. And that's when we made new highs right in the last 10 minutes of this market. So it is still showing some good strength here in canola. Also wanted to kind of show the July NOV spread here continues to fade. It is now down to $15.60. If you recall, back in May, that was up to $50, a ton of spread in between. The fact that we are seeing November futures rally while July futures kind of continue to stay stagnant kind of shows that the move or the roll from the July to the NOV futures is putting a bullish spin, meaning we're likely seeing some open interest being added to this market as opposed to subtracted, as what sometimes happens in a more bearish market when we're at roll time. So there is a roll happening. It is positively affecting the November canola at this time, and hey, that's a good thing for Western Canadian farmers. We went through quite a bit of detail and some takeaways and things like that of the USDA report in our hot takes today. Hot takes is part of our premium insights. We want you to subscribe to those insights so that you get all of the reports that we send out. That's our weekly reports, our hot takes, and our morning commentary, which are always very valuable, or we are told that they're very valuable. So you can subscribe today for only $99 a month. If you click on the subscribe button at CanadianAgMarkets.com/subscribe, it'll take you to one of these pages where you just put in your email, phone number, whatever card you want to use. You can even pay with Apple Pay. You can cancel any time. It is a monthly subscription, so you're not signing in for a year or anything like that. So subscribe today and get all of our great information that we send out. All right. Like I said, we did send out a hot takes to our clients with some of the key takeaways from the USDA report, but just to run through kind of the analyst expectations and what happened today. Corn stocks were trimmed for the 2024 crop year to 1.365 billion bushels from 1.415 in May. The average trade guest was expecting a cut, but to 1.392. So 27 million bushel difference. So in corn, that's not huge, but still a tighter carryout from 2023 by a pretty wide margin. 2025 ending stocks were also lowered and by a wider margin. That'd be 250 million bushels from 1.8 billion bushels to 1.75 billion. These are still, of course, very early estimates from the USDA using trendline yields. If you remember last year, we started the year off at 2 billion bushels and trimmed our way down now to that 1.365 billion bushels. That we see for the 2024 year right now. So again, I think the market is discounting the large carryout for 2025, but the fact that they did lower it month over month, I think, is significant and can be looked at as supportive to the corn market. All our global ending stocks for corn were also lowered in this report to 275.2 million tons. That's down from 277.8. So overall, this report could have been seen as bullish for corn. We did see a green candle, but I wouldn't call this chart bullish by any stretch of the imagination just yet. Although it was a mildly bullish report, it was probably most favorable to corn than the other commodities, but we still didn't see a big reaction in the corn market at this time. Moving on to soybeans, here's United States ending stocks. There's no change to ending stocks on soybeans. Trade was looking for actually small revisions higher and didn't get them. 350 million bushels in the old crop, 295 in the new. So there is an expectation of lower ending stocks year over year for soybeans. Global soybeans. I'm going to start calling them soybeans. The increase in global ending stocks, though, was pushed them higher than last year's record for 2025. This now sits at 125.3 million tons. So from a global perspective, not super bullish here. South American production was left unchanged. Most traders I know are focusing still on the 2024-25 crop. That would be the one that was planted in fall of 24 and harvested this spring, winter or spring. The USDA has also started to estimate the next crop, which is even bigger, but take it with a grain of salt because it hasn't been planted yet. It won't get planted for some time. So this is just USDA estimates for the fall and winter crop of soybeans in South America. But still, the 2024 one is still a record large crop if you don't factor in 2025. What did July soybeans do? Well, they kind of fell apart a little bit. They did trade below the channel that we've been tracking. Not that channel is gospel or anything, but there is some support as we move towards the 1035, 1040 area. So, soybeans did kind of weaken off today after the report, down 8 cents on the day, but traded, a little bit lower than that yet even. November soybeans is actually now the contract with higher open interest. Although the July is still trading with more volume, or did trade with more volume today, there is a similar pattern here in the November, although the November was only a couple of cents lower overall, and it's a little bit farther away from the support that we saw here. This is the same kind of support at the end of April near 1010. We're still 1027, 10 and a quarter it traded down to today. So we're still 15 or so cents away from that support. So farther away from that support in the November than we are in the July. Wheat ending stocks were unchanged for 2024, but were lowered more for 2025. In May, the USDA expected 923 million bushels carry out for the 2025 crop year. That's in the United States. This month, that got trimmed to 898, so 25 million bushels on an equal increase in exports. So they also, that trimming of ending stocks came from 25 million bushels more in exports. Global wheat ending stocks were also trimmed by almost 3 million tons. The U.S. reduction, if we take that 25 million and convert it to metric ton, accounts for about 680,000 tons of that. So not the whole amount. Russia accounted for 2 million. Russian ending stocks from 2024 were reduced by 1.5 million tons. And domestic feed was also increased by 500,000. So there's your 2 million. So when you add that 2 million to the, almost 700,000 from the U.S., that's almost 3 million right there. There's other small revisions as well. World ending stocks have now been on the decline for 6 straight years. Again, you wouldn't know that by looking at the chart. Today we saw Chicago wheat down 7.75 cents, or continuing to trade below the 20-day moving average. Not a lot of support here now, as until we get kind of back down in between $5 and 5.10. Although you could argue that there is some mild support here just above 5.20. We did see a little bit of different trade on the Minneapolis today. We were up 4 to 4.5 cents on the Minneapolis, which probably is factoring in some tighter fundamentals, particularly on the spring wheat side. We didn't see a by class breakdown of wheat in this report. We will see one next month after the acreage is printed from the USDA at the end of June here, and that'll give us a little bit clearer picture as to the spring wheat S&D on its own. All right, thank you for joining us. We will see you again tomorrow. We look forward to Friday, as we always do, and have a great day.